Hello guys, welcome to my first YouTube video on my brand new channel, which will be about who knows what, but let's just see where the universe takes us. Today I wanted to do this quick video to show you how simple trading can be. I know that when you're first starting out it can be really quite overwhelming, and I thought there's a few ways to make it really quite simple if you don't have a lot of time that could make your life easier. So what I want to show you today is the power of moving averages and how to trade based off those. I'm going to be starting on the daily chart and just going through some ways to show you how to properly use moving averages, because I often get asked in our Discord group what MAs I'm using when people see my charts, and it's not a one MA fits all kind of answer. What are moving averages? A moving average is a widely used indicator in technical analysis that helps smooth out price action by filtering out the noise from random short-term price fluctuations. It's a trend following or a lagging indicator because it's based on past prices. The two basic and commonly used moving averages are the simple moving average and the exponential moving average. The EMA gives greater weight to more recent prices. So the way that I use moving averages comes from people that I have watched over my time on YouTube, and basically working out that you need to have a range of moving averages when you're doing your charts to figure out which one is working for the period of time and also the asset that you're actually trading on. It's not a one size fits all. So when I'm using moving averages to trade, and I use them a lot when I'm trading higher time frames, I start by putting this template onto my chart, which I have preset, and I will show you how to do that soon. This indicator template that I have saved for myself, as you can see, is made up of a series of MAs and EMAs. I will get rid of this one because it's not relevant for what we're doing. I will post in this video description what these MAs and EMAs are, so that you can just copy them into your own chart if you want to. And I'll also show you soon how to set this up as a template to easily load it when you need to. So if we were looking at this, this strategy that I'm about to show you is good for someone who doesn't have a lot of time to trade, doesn't have, has other things going on in their life, and doesn't really have the time to dedicate to learning to become an amazing trader, but wants to take advantage of the financial markets. So with this one, we are basically just trend trading, and we're following whatever moving average is being respected dependent on the asset that you're trading. So when I first load a chart, I load it like this, and it looks like a chaotic mess. And the goal is to start to eliminate moving averages that don't seem to move with the current price action that I'm looking at, or not even current, like just in general. So by zooming out, I start to have a look at what lines, which are moving averages obviously, are not really following the price action of the chart that I'm on. So looking at this, I can see the price action comes up here, comes down here, and I can easily identify that this blue line doesn't really have any congruence with the price action. So I'll get rid of that one first, just by clicking it off like that. The next one would be the purple, so that one can go too. And I would probably also say the green line This one here doesn't have a lot to do with what I'm doing either. And I'm going to keep three. One is a fast, medium, slow moving average, and I'll explain why in a second. So I've still got to come down a couple. Now that it's getting tighter, I would probably say this orange one, and I say that because I can see that the yellow and the greenish one here are better than the orange. It's not that the orange is not good, but I would find the greenish and the yellow better than the orange, so I'm going to get rid of that one. And I'm also going to get rid of this red one here because I think that this fuchsia kind of one is better, and the reason is you can see here as it's moving, it's acting as resistance here, and then once price breaks through, it's acting as support quite well. Same over here. Do I have that anymore? Yeah, same through here. So I think this fuchsia type one is a really good one for Bitcoin, which is what I'm on now. So I'll get rid of the red one. So that leaves me with three. And now what I want to do is use the future one, which is the 200 MA. I want to use that as my dynamic support and resistance. So the first thing I'm going to do is look, is the current price action above or below that line? If the price is above this line, I am only going to look for longs because I want to trade with the trend. If the price is below, then I'm only going to be looking for shorts again because I only want to trade with the trend. That doesn't mean that you should use it that way. It's just that's the safer way, which is what we should always be looking for. So once I've decided that, so in this situation here, I would only be looking for longs, obviously, because we're above the line. Now I want to look at the next two lines. One's medium, one is the fast, so the yellow will be the medium. I want to wait till I can get a crossover of the blue one above the yellow. When the blue's above the yellow, we can see price is bullish, right? So if I'm above the fuchsia line, I'm only looking for longs, which means that I need the blue above the yellow to take an entry. And same the other way. So here prices come below the pink. So I would need the yellow to be above the blue, and then I could take shorts. Now for me personally, as you can see here, price was above the fuchsia, and then it came down below, but the yellow was already above the blue. I personally don't trade that. I would wait for the pullback and then trade when it crosses. So I personally like the cross to happen when I've already decided my direction. I don't like it to have happened and then cross below the 200, if that makes sense. Doesn't mean you can't do that. It's just not what I do. So having said that, now that you've decided, it's just a matter of taking entries at every cross and then just letting them ride. So if you're really time poor, I'm going to show you how easy this can be. And we're on the daily chart. So how easy it can be to get in and just take profits over time. So following these rules, I would not take this trade because the cross had already happened. So I'd wait for this and I would take an entry here. If I show you the measurement tool, I would take my entry here and I'm going to get out when it crosses back. So I would hold this to here when it crosses back, okay? Now, yes, there is a long back to the 200 here, not my jam. Could be for you, and that's totally fine. It's not mine. So I would wait this period out and wait for the next cross. So I would get in on this cross and then I would get out here. Now, the other thing to be really aware of is that moving averages are not great in a sideways market. So when you are looking to chart things, that is something you really need to be aware of. And this example is perfect right here, because look how many times it's crossing back and forth. It's very hard to make profit in this area. So if I was trading the daily, this would be a no trade zone for me until not only do we move out of that sideways market, but I start to get a nice curve in the direction that I want to go. So with moving averages, it's really important that you look for curves in the direction you want to go. So if I was to be, looking at this and there was a cross there, but it was curving up, I wouldn't take an entry because I should be looking for shorts. I'm looking for a curve down. So depending on how on the ball I am, I probably could have got that entry because if I zoom in really close so you guys can see, you can see the curve form here. So I probably would have taken an entry on one of these small red candles and I probably would have caught that huge move. And also I would have alerts set up. So it's not like I'm sitting here watching it every day. I would have an alert that would go off here and here and here and here and every cross. So if I get in super close, you can see that we got the cross here on this red candle. So you would have caught that parabolic move. So we'll put that one in because that would have been your trade as well. Let me just get there. So from here, and I would have traded that to the next cross. Now, all this while, this is 38 days. I wouldn't even be checking charts. If I was a day, like trading on the daily chart, and I'm a super busy person, I may check in on my phone, but I wouldn't be charting every day because I'm literally just waiting for an alert to my phone. Then I'll jump on and I would buy or sell. So yeah, it really can be that easy. This is sideways market again, so wouldn't trade this. This would be a no trade zone. Oh, wrong one, sorry. Here is a no trade zone. And again, you would be getting alerts through this no trade zone. And it's up to you because there are percentages to be made. If you went from there and got out there, it's still 10% over 29 days. So you can do it if you want to trade that tighter range. I'm just currently looking for the bigger moves, but there is money here, but there is also chances that it doesn't go that way. If I show you here as an example, do I have an example? No, I don't, because that crossed above. No, I don't really have an example, but you guys get what I mean. Now, so from here, I would now start moving up, but I need to wait for it to break and I need to wait for the lines to come back again before I get into a trade. So I wouldn't trade this area. However, I'm now looking for longs. Why? Because I'm now above the 200 MA, the pink line. So I would be getting an alert, and now I want the green to be above the yellow. This was already above before we crossed over, so I wouldn't get in there, but I would get in here and I would get out here. And then the next trade would be here and get out here. Now, just with that as an example, is that all the ones I did? Yeah. We've got here 30% in 54 days. We've got 15% in 20 days, 44% in 38 days, 56% in 36 days, 40% in 28 days. Like, that's still a huge amount of profit with very little effort. And this, don't forget, is on the daily. So this, what I'm teaching you about MAs, is possible on any time frame. It just depends on how often do you want to be getting alerts and are able to go to your trading account and close or open a trade. So if you were to do this on a 4-hour, the MAs that you use may change, but the same rules apply. So if I get rid of all of this and reload and get rid of that one, and now I go down to the 4-hour, it's the same thing. So I'm not going to, just because I chose those MAs on the daily doesn't mean they're going to be right for the 4-hour. So you just reload depending on what time frame you're on, and you pick them out again. It can be the same, doesn't always have to be the same, but the same, you would just end up doing the same thing and getting rid of the ones that are irrelevant, and go with the 3 that are relevant. In this case, it's probably the same, but it really could also be the orange and yellow. Let's just do the orange and yellow and see what happens. And I'm going to keep the red, to be honest. So I'll hide these. Let's just see how this looks once they're gone. No, probably not. Yeah, probably that. So on the 4-hour, same deal. So the only difference is because it's now a 4-hour, you'll be taking profit and opening trades more often. If the daily is too long for you, you don't want to wait 38 days to open or close a trade, try the 12-hour if you're busy. And if the 12 hours is taking too long, try the 6-hour. Like, that's the best thing about trading, is the whole point of it is to fit in with your life and what you can dedicate to it. And this is just a really simple way to do it. Now, with regards to that template, I'll show you how to do that yourself. So if you go to the chart layouts, is it chart layouts? Yep, and just load a new chart that's got nothing on it. And then you go up here to indicators and just type in MA. Now, how many MAs do I have? 1, 2, 3, 4, 5. So 6 MAs. So you're just going to click on moving average, that one there. You can favorite it if you want, so that it's easier to find in future. Click on it 6 times. 1, 2, 3, 4, 5, 6. Did that work? Yes, it did. Okay, and then we're going to go to EMA and click on moving average exponential, and I've got 2 of those. So now that they're all here, I'm going to go and edit them, edit the settings, and use the numbers that I will post below, but just to do it quickly for you. Now it's 20. Next one is 50. The next one is, and that's all you need to change in the settings. So 20, 50, 100, 100, 200, 350, and 500. And the EMAs are 10 and 200. And then if you wanted to, if anything's confusing, you can also in the settings change the color if you want to make sure that they're really different from each other. So that's that. So once it's all on your screen, I like to have CCI as well. So same thing in indicators, just type in CCI, which is this top one, commodity channel index, add that one, and then that sits below. So when you're deciding to get in, once you've decided on your moving averages, if you don't know how to use CCI, basically if you're looking for a long, you want to make sure that the line chart here is towards the bottom, and if you're looking for a short, you want to make sure it's towards the top, which means, you know, it's got room to head in the direction that you want it to. So once you've done that, you've played around with the colors and made them everything that you like, you can then go to, is it this one? Yeah, indicator, sorry, go to templates and go save indicator template. And then you can name it whatever you like. I'll just call it MA Daily. And now every time you want to trade this style, no matter what chart you're on, you just go to here, or if you don't want to mess with this current chart that you're on, you'll load a new chart. There we go, that's fine. And then you will go to templates and you find the one that you just saved. Oh, I don't think it saved mine because I have too many, but basically it's that one. Okay, ignore that. And then they all come up. You just do the same thing, just delete the ones that don't matter and go with the ones that do matter. Now, the next thing you need to do once you have done all of that and you've decided where you should be taking longs and shorts is you need to set your alerts so that you don't have to watch your screen all day, and you just get a signal when it's time to get in or out. So if I go back to, I think we kept that one just so I can set up alerts properly. That one, and yep, these were the ones that we chose originally. So looking at where we are currently, we are under the 200 MA, so we should be looking for shorts. However, as you can see here, we've got the green cross over the yellow, which means that price is moving up. So you wouldn't be getting into a short right now. You might have a chance to get closer to that MA before taking a short and just get a really juicy position. So here what you would be doing is setting up your alert to tell you when it's time to get into that juicy position. So on the side here, we click alerts, click the plus, and you're going to go, so we want to be notified when the green crosses below the yellow, as that is signal to go short. So we want the EMA 10 crossing, and I don't choose crossing down or up because I want to know every time it crosses, crossing the MA 20, okay, and I want it to be once per bar so that it tells me every time it crosses, and the expiration date, set it to as far in the future as you can, and then you can just write yourself a note here to be like MA, we're on the 4 hour cross, go short. Okay, I'm not allowed to have those dates. Give me this one. Yep, and then that's it. That's saved now, and you can see it here. That will give me an alert when this crosses down. Once it does that, once I get that alert, I will have a look at CCI and see if it's time to enter. Now, will I always catch the tops and bottoms? Will I always, close out in as much profit as I can? No, but that's okay because I don't have time. So the point of this strategy isn't to make as most money as you can. The point of this strategy is to make something when you're busy. So if I go back to the daily, for example, let me show you. Let's see here. Yeah, so if I would have got into along at this cross and out at this cross, then let's see if I make that really big, can you see? Then yeah, I would have missed out on this profit here, but I've still made 56%, so that's 56% market move, like that's huge. The next one, where did you go? Here, if I got in on this cross and out on this cross, yeah, I miss all this, doesn't matter, I've got nearly 40% market move. So yeah, just the thing is, if you want to use this strategy, yeah, it's basic. And if you are someone who likes to check charts every day, you can use this, and you probably will pick the top to get out. You know, like, that's amazing. But this is more for people like, you know, mum and dad investors and things like that, who just don't want to be on the charts all the time, and are happy for a really simple way to trade. Now, the other thing I need to tell you is that using a strategy like this, especially if you're on the daily or the 12-hour, it's a low leverage strategy because you need to have quite wide stops. So, or a no leverage strategy, even something you can do on Binance, for example. So if you are trading on BitMEX, trade the ones that, you know, trade the M20 contracts or whatever comes out next, so that you don't cop the fees, because doing this on perpetual contracts will attract a lot of fees, and you don't want to do that. So yeah, so use those, or use Binance, or use something like that. If you are going to use BitMEX, low leverage, like I'm talking 2x, 5x at most, but probably most likely 2x. Yeah, so that's it. I think that's all I have to show you. I hope that this helps and has given you another really simple way to trade that does not turn your hair grey like it has to me. Thank you guys. I will see you again.